Yo, what's going on, guys? It's your boy Trillionaire Mac, and welcome back to another video. So, for those of you interested in my price action trading strategy, I'm going to give it away on YouTube free of charge. All right, this is going to be part one of the price action strategy. Okay, it includes Fibonacci, it includes candlestick patterns, and a couple of other things that you guys will see as you continue to dive into this information. Now, if you're currently an institutional trader, okay, you all may not find too much information within this price action course that is going to be helpful to you, okay? But any new trader, okay, someone who has nothing to do with the market right now, someone who knows nothing about the market, or maybe you know a little bit, maybe you're getting into other styles of trading, feel free to check out the price action course that I'm going to be uploading to YouTube, okay? Now within this price action course, I don't use the Fibonacci or any of the content anymore because, as you guys know, I'm an institutional trader, but the price action course was the first course that assisted me with finding stability, profitability, and consistency within the market. And then from there, it was just all about figuring out what I really like and how I really like to trade, okay? But I'm going to go ahead and upload this for you guys because I've gotten a lot of questions about Fibonacci. I've gotten a lot of questions about candlestick patterns. I've gotten a lot of questions about, do I still use technical analysis? Things like that, right? So feel free to enjoy this video, enjoy the content. I'll catch you guys within part two. This is going to be part one. If you're not already subscribed to the YouTube channel, feel free to go ahead and subscribe. I would love to have you a part of the family, as well as when you're ready to take your trading to the next level as it relates to becoming an institutional trader, feel free to click the links in the description. Remember, I am an institutional trader. I am not currently a price action / technical analysis trader, but this is going to be great information for those new traders out there, regardless of your trading style. Maybe you'll find something that you can use, maybe you won't, who knows, but it's great content and it's great to introduce yourself to this type of material. With that being said, let's go ahead, start the video, get into part one, and I'll catch you guys in part two. Peace out. Video. Okay, so in this video, we're going to go over what market structure is and what a break of market structure looks like. Okay, so we'll just hop right into it. This is going to be very, very, very important. I suggest that you guys, let's lock this up. I suggest that you guys maybe take these drawings into consideration, draw them within your notes, draw them, within the journal that you have. Whatever you're taking notes with, I suggest you guys kind of draw these out so you can actually have a visual and you can actually see exactly what I'm talking about. And when you're in the market yourself, you will notice these same patterns that happen over and over and over. Okay. So when we are in an uptrend, price is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, so let's just label this really quickly. Okay, so right here we have a low. Right here we have a high. Right here we have a higher low. Right here we have a higher high. All right, another higher low. And another higher high. And another higher high. Okay. So this is basic market structure for an uptrend. Higher low. Okay. So this is basic market structure for an uptrending market. Okay. When price is in an uptrend, it's basically creating higher highs and higher lows while it's, within the uptrend. All right. Let's move this up just a little bit. There we go. That's more like it. Okay, so while price is in an uptrend, like I said before, we are creating higher highs and higher lows. All right, price just bounces back and forth between higher highs and higher lows, and we know that we are continuing an uptrend because the higher highs and higher lows continue to form. This is basic market structure for an uptrend, and you're gonna hear me repeat myself a lot, and the reason why is because the more you hear these things, the better at it you will become. It's just natural, right? The more you hear something, the more familiar you become with it, and the easier it is to, see those patterns, catch those patterns, things like that. So when I say the market has broken structure to the downside, this is what I mean. Okay, so wait. Before we hop into that, let's go over market structure to the downside. All right. So when the market is in a downtrend, we're seeing lower highs, lower lows, right? Lower highs and lower lows. So let's go ahead and label. Here we go. We have a lower high, we have a lower low. All right, and basically the market is just going to continue to repeat the same thing over and over. All right, while it's in the downtrend. All right, that's it. So this is basic market structure for a downtrend. This is basic market structure for an uptrend. Okay, now when I say structure has broken to the downside, what I mean is this right here. You see this higher low right here? This higher low right here. Okay, as soon as the market created a higher high and then created a lower low, right? Which means that this low right here is lower than the previous low point. That is when the market structure has broken to the downside. This right here, this break of structure, this is what a break of structure is. Instead of creating a higher low point to continue the uptrend, the market decided to create a lower low point to reverse the trend. Okay, so with this point right here, we have now switched towards a downtrend. All right, so it is very, very, very important to understand market structure. All right, this is basically what the entire strategy will evolve around. Market structure. Now we have other confluences that we use along with market structure, but if you don't understand market structure, you're going to be very, very, very behind with the strategy. This is the foundation of the strategy in itself, market structure. Okay, so we're going to take it from the very top. When the market is in an uptrend, it's creating higher highs, higher lows. Higher highs, higher lows, higher highs, higher lows, higher highs. When the market breaks to the downside, okay, now we just normally say market structure has been broken, but just to put it in layman's terms, when the market structure breaks to the downside, we are now creating a lower low, a low point that is lower than the previous low point. So if this is the previous low right here, here, let's put that back. There we go. Okay, so if this is the previous low point right here, we can all see that this low right here closed lower. All right, as soon as it closed lower, the body of the candle, that means that the structure has broken to the downside. Now we are expecting lower highs and lower lows, lower highs, lower lows, lower highs and lower lows. And we will continue to expect lower lows and lower highs until what? I hope you guys said it. Until market structure breaks to the upside. Now, how does this look? When market structure breaks to the upside, it'll look something like this. Say it comes right here. We'll come back down. Boom, right there. See it? As soon as the market closed above this lower high right here, it created a what? A higher high, right? Now we have switched, and now we are creating higher highs and higher lows. So because of that, hold on, so because of that, there we go. Because of that, we have now switched to an uptrend, and the market has broken structure to the upside. All right. So now we can go ahead and take these right here. This is a higher low point. Why? Because it's higher than the previous low. Oh. Now we have a higher high point. And right here was a lower high point. Okay? So it'll look something just like that. We have a lower low, lower high, a higher low, and then boom, that higher high. As soon as that higher high breaks this lower high, the market is now within an uptrend. Okay, and do you see how these breaks of structure create W patterns as well as M patterns? Those are exactly what W's and M's are within the market. So if you've ever seen a W pattern or an M pattern, it is because you are seeing a market structure break. Okay, now these W and M patterns can form and reject and still continue the trend, right? It absolutely can. But as soon as you see one of these patterns and then you see price break structure, then just prepare for the trend to reverse, to change, to consolidate, something along those lines, okay? So make sure you have this written down, and I'll catch you guys in the next video. Peace.